All right, so I'm doing a video on stop losses and some market analysis, and I wanted to use this to sort of guide me in terms of developing or formulating ideas. So this is Neo. I'm currently in a Neo trade right now. I bought some Neo call on this level over here. When it closed, I'm actually red currently, waiting for the market to open in the next 25 minutes. But I just realized that there are certain things I could do to help my analysis whenever I'm coming up with ideas for trades, particularly swing trades. And this one just kind of occurred to me that it's always good to look for double tops and and play those with trend lines. So, for instance, now over here we had a certain obvious trend because we drew this trend line, and we're happy with this trend line because price respected certain levels on the trend line, and this is a key understanding or key point to note that price needs to respect something as it's moving. And as a trader, we are trading off the levels and the key points. So, for instance, now this is a trend line where I have noted 5 different lines that price is respecting. And the slope as well is something that price respects. So if you notice over here, price has bounced here, price has bounced off this line, slightly off this line, but it's keeping within the slope here, bounced off here, bounced off here. So this trend line with all these points are key levels to be respected. And the lines towards the end are even more key in my opinion, because each time prices touch them, it's something major has happened. Like here, it's come all the way down. Here, it's gone all the way sideways, and then it's kind of stayed within this little channel. I don't generally like to trade within these channels. I'm more interested in these areas. But what is even key here is we reach this level, price is rejected. So we have a key level here, and then it's come back to that level again. And that's another key point. Whenever price comes to this level, then we're now interested. And let's even look back in the past. So price came here, came back here and broke it. So we have a trade up, right? So we could take this trade up because it's broken this level, and it actually retested the level here, which even gives you even more confirmation to go long. So understanding that information is really, really key. But what's happened here is price has come to this level. We mark this level here. It's come back, then rejected. Now, the question is not how do we get into the trade, but when we get into the trade, how much do we risk? And how much do we risk and where do we put our stop loss? And that has always been a big issue. It seems very obvious that, oh, get into the trade here. Yeah, because I can see what's happening here. But if I didn't see what was happening here, say for instance, we were here. Now, price has broken this key level, but we still have this level that price is still respecting. So we could decide, okay, since price is respecting this level, we could get in here still and put our risk here. The probability of that happening could be low because we don't know what's happening. Or wait for the next level, which is here. I can't seem to get the page. Okay, here we go. Nope. Let's do this. So we could then now say, okay, price has broken this level. Now we want to go short. Okay. And we're risking this level here because if price bounces off this, we are wrong. And that is our premise. We could decide to go short here and target this level. And that could be our next, our target on this level as an exit or next level evaluation, or we could even move our stop. And that makes sense. So we could say, this is a level, we're getting in if it holds this level and breaks this level. So we always need a condition, 2 conditions for placing a trade. What level are we looking at for price to reject? And what level are we looking at for price to break? I.e., what is our confirmation level? So this is our confirmation level. So we now look at that. And if price breaks that level, we jump into the trade. That is our trigger to get into the trade. And this is our trigger to get out of the trade. So every trade needs two triggers. One obviously is your stop loss and one is your entry. And so in this case, price opened and broke this level. We could say, okay, we put our order here. Even just before the market opens, we put an order here and we place our stop here. Price gets in here and that's our order. And then as you can see, we can stay in the trade. Here we have maybe 2 to 1. We check our risk reward. We can say, okay, this is where we exit. Regardless of risk reward, I think this is what we want. If we say we're exiting here, we could see how price responds here. Once price breaks this level, we could put our stop. We can bring our stop all the way down if you want and say that is our level of volatility. And of course, as you can see, prices retrace down. Now, as price is going down, you're now in here. You can even put your stop to break even, or even here if you want, because you want to make money. You could then now decide when to get out or just to kind of keep following the trade. So for instance, price comes all the way here. There's a temptation to take out your order once price reaches here, which is kind of where I am with the Tesla trade, which is price has I'm in profits, but the question is, where am I going to get out? Do I stay in and hold for price to keep going, or do I get out for price to come out? And I'm going to show that very soon. So we need criteria as we're trading to keep us in or to take us out, regardless of how much money we have made or lost, right? In this situation here, because this is our stop, this is our entry, we've made money. So the next thing is, where do we then now get out? Do we say at 2 to 1, which is probably somewhere over here? Because if, say, for instance, now this is our entry. So I'm just going to measure that. So if, say, oh gosh, how much is it? It doesn't even tell you. Yeah, you can't really see it. But let's say that is that. And this is like 2 to 1, right? So we're already in money. If price, we bring our stop here when price breaks it. If price breaks that level, we take our wins. We made more than 2 to 1. We made like up to here would have been 4 to 1. But if we're saying that we want price, we want the potential to make more because we know price is going to swing down. We want price to test this level that it has rejected. So if it comes down here, rejected, we put our stop here. And we're now allowing price to test to see whether it can still go down. This is the thing that's so annoying about trading, because you could be up, say, $1,000 here. This is $500 here, and you come back and it could knock you out. So you need to kind of be aware of that. So here again, we now have another idea. Price is respecting this level because we've drawn this according to that. We've seen how it respected here, 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 and here. So now we have an idea, which is we come in, we draw our trend line. We're seeing how price is respecting this other level. So it's almost like you're looking for levels that price is respecting, almost this. And then take this down. We're already in short because look at, we have ideas this, and then it's come to this level, and then we've taken it down here. So we're in shorts here. We're in short here as well. And then we could then now do the same thing. Play this down and target 2 to 1, and look at what's happened. It's even gone down here, and then we now see this rejection, which is absolutely beautiful. So this is how we would do this. So now we're in this situation where price is respecting this level. We want to see what happens. It's already rejected it once. It's coming back here, and at the open, if price breaks this, I stay in my trade, because remember I got in here, which was not a great place to get in, but I got in on a plane. If price respects this level, we stay in the trade. If price rejects this level, I'm going to get out of the trade, because I think price will probably head down here. I don't know whether it will, I can't, but that's my condition. Now let's look at Tesla and my idea for Tesla. So with Tesla, I kind of got into the trade around here, right, this level. And this is my idea. I mean, it's kind of a bit weird because it's broken here and it's come back down. And so this trend line is not a good one for price respect, and it should be redrawn. In fact, I can do that right now. So if I include that there, that looks like an anomaly. Actually, I'll put that there and then put the base here, and it's actually a really good one there. Yeah. So as we can see, price respecting this trend line, respecting the base here, here, here. So what do we have? Say getting in on the break of this trend line, we have price hitting this level, coming down, not even getting up here. We have a double top here and price dropping down. Okay. Whew. This one is a difficult one to get in. Price dropping down, and then it comes here. Now we have our level, so we can now get into the trade. And this is another thing. When do we get in? So we see where we can get into the trade, assuming that we have a level that's well respected. We have a double top here, between here and here. Price drops, double bottom, price, So now price has broken this with momentum. We can get in here. Unfortunately, this is our stop here. So what that means is if we got in here and we were risking this, we want to make a bit more. Yeah. And what does that mean? Does that mean when price comes back in, we are wrong? And this is the question. That's why that is not a great entry point. Because we're taking the trade based on a breakout. And our stop needs to be somewhere else. Because what if price comes back and doesn't retrace? Because I don't see the point of waiting for you to come for it to hit your stop. Because you've already come back here and this is the next level. Your stop should actually be here. But I just don't see the point. Why would you want to risk a trade based on a breakout that's not working? And for volatility's sake, I think you should put your, I don't know. If it comes back, I think it's easy to put your stop tighter. But this is the thing that I'm still struggling with, i.e., where do you put your stop on a breakout? Do you take the trade here, or do you take the trade, where do you take the trade? Because even if you took the trade here and it comes in and comes out, I don't know. This is not a great place to take a trade, breakouts. Retests, I find, are better places to take a trade. Because a retest of the breakout is a better place. But taking a trade on a breakout, your risk reward isn't great. And I saw this in a video earlier a few days ago, where the problems with taking breakouts, you really have to put your stop here. Because obviously the price is moving in, it's respecting other things too. So taking the trade here is a bad idea in my opinion, which is what I did. You really want to be taking the trade at an area where price has tested and is respecting. Price is not respecting this area, which is why it's gone through with momentum. There isn't any reason to put your stop loss here. Unless here, we get in here. Once we break, we're looking for an area of consolidation, and then it goes back up. We can get into the trade there, and we can put our stop here. But that may be because of something else. I don't know. The only other thing is testing the double bottom, following this trend, seeing a breakout here, then we can put a stop loss here. In which case we're saying we're testing where this is our target. This is proving our point of the breakout. We're in a demand zone, which again is another idea for taking a trade long. And we can put our stop here, or we can even put our stop at the break of the demand area, depending on what you want or how you want to play it. So the trigger is price breaking this level. So you have price breaking this level. So you have it here, here. And so price has broken this level. This is your stop. Your risk is this. Your reward is up here. And then you can just kind of keep following it.